Hi there, I'm Eric Zaunscherb. I'm the CEO and chair of GR Silver, ticker GRSL on the Venture Exchange. And we are focused on our Plomosas project in Sinaloa, Mexico.
Eric, good to see you again, sir. It's been far, far too long. Right, Silver Mexico. This seems to be making a comeback after a few years with AMLO discouraging foreign direct investment. It seems. So, what's this? What's the new gal Claudia Sheinbaum going to do for mining?
That's a great question. Uncertainty is always the bane of existence for companies active in any jurisdiction, and certainly for investors. So far, the read is that President Sheinbaum has a more practical, more pragmatic approach to mining. There were a lot of celebrations and corks popping when she left open pit mining ban off of her to-do list. But I think one has to be realistic that changes are in the works, that she is very much focused, and rightly so, on making sure that Mexican culture and the communities and the environment are protected. That's her right, and it's her obligation to make sure that these things are done the right way for their people. So I certainly have no problem with that. The problem arises when things are sprung upon the investor. I don't see that as going too far off the rails right now, and certainly if you look at the metrics, you can see it. I track, as you may recall, the enterprise value per ounce for companies. And if you look at the peers in Mexico as compared to the peers globally, a normal discount of sort of 10 to 20% is common for Mexicans relative to the global peers. And that got down to 50% when AMLO started talking about open pit mining. So it really hit hard. And with the election of President Sheinbaum, we actually saw a premium right after that. So Mexicans were trading at a premium to the rest of the world, which is not realistic. It's settled back now to about a 10 to 20% range, which makes sense.
Right, and are we going to get overrun with Mexican or Canadian-owned Mexican silver stories again, or are we building up, or attempting to build up supply into a much stronger demand environment? How do you read the future?
Yeah, I think you're absolutely right. First of all, on the demand side, I think we've talked many times, and I know your guests have talked about the advent of photovoltaics and the impact on demand for silver. And so 16% in 2023, it's expected to be about 19% of global demand in 2024. Mexico's brilliantly positioned for meeting that demand, for participating, and this has been stated on her part, that this is a goal of hers, is to participate in the energy transformation, the decarbonization. And so when you've got a natural advantage, a geological advantage, as Mexico does, and you've got this long legacy of centuries of mining, this deep bench of metallurgists and mining engineers and geologists, why on earth would you throw that away, that competitive advantage? So I believe that she's actually going to, at the very worst, tolerate mining in Mexico and actually encourage the mining, particularly of silver. Coming back to your question, are we going to see an influx of Canadian companies with silver assets flooding the market? I think what the market wants right now is consolidation in the silver space. And what we're going to see is the creation of new, strong players in the silver space. We are working, as one of our initiatives is to participate in that consolidation, to see the creation of companies with critical mass, with market caps of 200 plus million Canadian, that have a cash flowing asset, that have a pipeline project that's working towards development and has exploration, scalability. And that complete package is something that the market is on the hunt for right now.
Okay, and what else is the Mexican government going to do for these companies, these foreign direct investors? Does mining code need to change? Are you happy with what you've got? Is it competitive? How do you feel about that side of the operational admin side of the business?
Yeah, I don't see anything happening to the mining code that is encouraging in terms of making life better for the mining company. I think it's more about making sure that mining companies live up to their responsibilities as good corporate citizens. I think we all want to see mining occur in a manner that protects the local environment, that protects the local communities, and works in partnership with them. And I see absolutely nothing wrong with a country requiring that of its corporate citizens.
Okay.
So I'm quite happy with that.
Okay, so federally, things looking good again. We're positive again. What one hopes. That seems to be the general reading when I've been speaking to people. What about state by state? Because we've heard some states going through let's say some sort of reset moments. We've got things happening on the ground in some states where it's harder to operate. It seems we were meant to be there a couple of weeks ago for a few site visits, and we were advised perhaps we shouldn't go. So for you, you're in Sinaloa, it's synonymous. What's the reality?
Yeah, I think you're being very diplomatic. I think
I'm trying to be.
Yeah, it's understandable. Certainly, Sinaloa is synonymous with some of the violence that we see on in various, television programs and on the news and what have you. And as always, you can be somewhere and around the corner something heinous happens and you didn't even know it happened. So it's not like the entire state is a bloodbath. Far from it. Most of the violence is centered around the capital city, Culiacan, which is in the central part of the state. We're located in the southern part of the state where we haven't seen any violence. The reality is that one can operate there, but one has to be very careful. We take our cues from the locals. So if the locals are working, then great, we can work. If they're not working, then we don't work. And we want to make sure that that our employees, our contractors, and our communities are safe. That's the paramount aspect of it. But again, the violence is focused around Culiacan, the capital. We've seen this split out into two factions of the Sinaloa cartel and Los Chapitos and the Maíslas, and they're going to have to settle this. The federal government has sent in several hundred troops to try and stabilize it. It's taking a little bit longer than it has historically, but you're wise not to go there at this point in time. It can change dramatically, so that in 2 weeks' time or after Christmas time, that'll be the appropriate time to visit again.
Okay, well, we will adjust our plans accordingly. But like I say, you feel that the locals, your employees locally, have got a good read of the situation, and it's not going to cause problems in terms of their productivity and ability to do work. You don't feel?
Yeah. And to be clear, it's not like that we are targets of the cartels. It doesn't work that way. It's more a matter of not wanting to be caught in the crossfire between two parties that are having issues. In fact, they try and communicate, oh, yeah, you should be working, because they don't want the local communities to be out of work. But that's not realistic.
Okay, right. There's we've got thesis, geography, jurisdictional risk. Some of the jurisdictional risk things we talked about. Let's talk about the project. Let's remind people. It's been a while since you've been on, okay? So let's remind people what you've got. So let's talk about Plomosas. First of all, maybe give us what it is today, and then we're going to get into what you're going to do in a minute.
Sure. Our focus is the Plomosas project, which is 78 square kilometers in that southern part of Sinaloa. And they're basically two parts. One is the former Plomosas mine, which was operated by Grupo Mexico from 1986 to 2000. And it was predominantly a lead zinc mine with some very nice silver and gold credits. That is sitting there fully developed, 7.4 kilometers of underground development, fully permitted, basically ready to go. It just needs a mill. So our secondary target is to somehow monetize that. So we're in discussions with various parties as to how that might occur. Our primary focus is on the San Marcial area, which is about 6 kilometers to the south of Plomosas. And our founder and president and chief operating officer, Marcio Fonseca, has done a fabulous job, A, in building a geological team there, but B, in fine-tuning the geological model. So at San Marcial, you've got something extremely unique. You've got a silver-dominant mineralized system. Okay, so basically we've seen this grow now with a hydrothermal breccia, broad width, that is then cross-cut by these feeder structures that are younger, that goose the silver and gold content. So between the two areas, we now have about 134 million ounces in indicated and inferred of silver equivalent. And we have a high degree of confidence in our geological model that will allow us to have a very good hit rate, in our opinion. So last time we figured that there was a new area that we wanted to test. The very first hole hit 102 meters of 308 grams of silver. Not silver equivalent, silver. And that's obviously a very nice width. The average width at San Marcial is 22 meters. And so with that kind of a width, we're focused on margin here. We are very confident that you can do high quality, high efficiency, low cost mining underground in order to recover that material. And then there's two large stopes that are conceptually that would cover almost all of San Marcial. So very efficient mining potentially.
Okay, maybe we need to jump back a bit because I need to understand how this thing gets funded moving forward and how you do, to kind of focus on how do you create value. You've got to do something with it, right? So during the last 3-4 years, it's been pretty tough for junior miners, explorers, etc. The retail had gone away. There's not a lot of liquidity, and the availability of capital was seemingly sparse as well. So you've done what it took to kind of stay at the table and stay in the game. I get that. What's that done to your share register during that time?
Oh, it's been horrific. We made a promise to deliver a resource update, which we did. But that occurred during the downturn you referred to, and we had to put out shares in order to stay alive. And worse was that we had an albatross hovering over us of became at the end of June, $28 million working capital deficit, which is absolute kryptonite for an exploration company trying to raise money to put drill holes in the ground. So we accomplished it. We've completed a financial turnaround. We have 329 million shares outstanding right now, but no debt. We have a positive working capital, and we are positioned now to raise money, to put money into the ground, to put drill holes into the ground. That's the number one priority, is that resumption of exploration. Number two is a way of monetizing that Plomosas mine sitting there. That's an asset that we have that's not recognized in the market. And number three is participation in some form of consolidation in the mining industry in Mexico, focused on silver.
But what's the order of play? How do you play that? There's three options. This is great. One requires a lot of money, and I guess the other two are who you know and can you strike a deal. So what does it look like?
You can't be linear. You can't do 1, 2, 3. You have to push forward on a number of different fronts. We recently completed a $2.4 million financing, which put us into positive working capital, which once permitting is in place, once the security situation improves, we can resume drilling. So call that in the new year. We'll see. Depends entirely on what's happening in the market and what's happening on the ground. That's one aspect. That's advance and de-risk San Marcial. That's our priority. At the same time, we are in multiple discussions about how we can monetize what we have at Plomosas. At the same time, we're in multiple discussions with companies kicking tires. Our tires are being kicked in that dance. The music is playing in Mexico right now. And
no, I get it. We've heard lots of conversations about people whose all the tires are slightly deflated, because everyone's been trying to do the same dance, which is stay alive, stay relevant, and maybe put themselves in a position where there is some symbiotic relationship can be formed by 1, 2, or 3 companies coming together. Who knows?
Sure.
But it in itself, I think it may have even been you many years ago, 3 years ago, said when you get two companies worth $100 million each and you merge them together, you get one $100 million company sometimes.
Yes.
Right?
Yeah.
So you've got to think about what's the best marriage, the best relationship.
Very much so.
Anyone's going to care about. So can we just focus? I know you said it's not going to be linear, but let's look at that bit. How do you create something which is with some of the prices worth 3?
Absolutely. If you're slamming together two exploration companies, all you've got now are two orphans to feed. what is the synergy? What is the positive aspect? How do you feed that critical mass narrative? That's what I said earlier. What you want to do is create something that has a cash flowing asset, something that has a development project that comes into the pipeline 2-3 years out, exploration potential. If you're looking at a lot of the smaller producers in Mexico today, they've got 2 or 3 years ahead of them. So when we send our geological team in there, we're looking to see, well, what's the potential with that cash flowing producer? Are they truly at the end of their life? Or are we looking at something that has the potential to be to 10, 12, 15 years of life with the expenditure of some exploration? And that's the other fascinating thing. A lot of those companies that are producers, they've got great operating people, but they've got absolutely no exploration. And that's one of our competitive strengths. What Marcio has done with his team, the team that he's grown there, and the insights that he's brought, when you apply that to a new story, that's where the synergy occurs, because then you can then see what the potential of that asset is. The market is also looking for scalability. Is the market looking for something with a 2 or 3 year life? No. Is the market looking for something with 10 years potential? Absolutely. So therein is the synergy, putting together exploration expertise, cash flow with operating expertise. That's the sweet spot.
I think the market, okay, it typically has rewarded scale, and it loves scale because it loves what the future can bring. But it also seems to be rewarding production or very near term production at the moment.
Yeah.
Is that a realistic expectation for your shareholders to think that you might be able to engineer something like that? In which case, then, which management team takes the lead? And what does that mean for shareholders?
Yeah, I mean, realistically, is GRSL a producer in a few months? Absolutely not. That's not the premise here. That what GRSL delivers is exploration expertise, demonstrable, and a project in particular in San Marcial with a lot of scalability, a lot of potential in a very unique geological system with these incredible widths and high grade silver dominance. That's what the company offers. We're not offering cash flow in a few months.
Okay, no, but I'm not quite sure what kind of partnerships or relationships you're looking for. So we've seen business models evolve and change over the last 2 years. Again, partially just to survive, partially as a reaction to what the market needs to see. We've seen, as you say, there's been some pretty big M&A recently in the space. Very big. Silvercrest, Crux, etc. It's you can see what the opportunity can be, but most companies won't even get even near that. They'll be looking from a mountaintop jealously from afar, right? So for you, I'm just trying to understand the extent of the ambition, the aggression from you on that side of thing, M&A, joint venture sort of stuff, right? That's it. So
I think there's two things here. One is market expectation, and that shifts, I wouldn't say daily, but certainly monthly. And so there's a part of the market at one point in the cycle where the market is looking for ounces. Just drill, give me ounces. Then that shifts because the market has gone in the toilet, and now the market says, oh, no, we don't care about ounces, we want cash flow. The only way you're going to survive is if you've got cash flow. And that forced some companies to make some rather challenging acquisitions of rather challenging mining operations with the thought that they were going to be in cash flow. We're back. We're shifting. The market, in my opinion, is shifting right now back towards rewarding for ounce growth. The ideal mix, however, is something that has cash flow with that scalability, with exploration potential. When we talk about putting companies together, a big part of the challenge is ego. And that is managements that say, wow, we're trading at only 0.4 times NAV right now, and so we're not going to consider doing a merger unless it's at 1 times NAV or whatever the premium should be, rather than looking at where the market is today. In my opinion, we're seeing more realistic managements right now. We're seeing an interest in having a smaller piece of a larger, tastier pie. And I think we're at the stage where we can put together some of these companies to create that.
Is it realistic or desperate? Never quite sure.
There's probably some T-shirt somewhere that says "Desperation is the mother of realism" or something. I don't know, but
Let's make it a thing. Let's make it a
Sure.
thing.
Sure.
No, but you know what I mean. I think it's a good thing because we've always had these issues where management teams overvalue their asset or the potential of their asset, and trying to get two egos to agree. But he keeps their job, and how do people get remunerated? Absolute nightmare. Harder than any other aspect of the merger. Okay, so look, it will be what it will be. There are conversations you're having, conversations to be had. It'll work out one way or the other. In the meantime, the Plomosas opportunity, get into the weeds of how you view that and how you monetize that, please.
First, I'm going to praise my board. Last year, the board met 22 times, getting us through the crisis. And this year to date, we've met 25 times. And this is a board that wasn't paid. This is a board that was doing it because this was a company in trouble and needed to be fixed. And part of the conclusion from all those meetings was to focus on what we do best, which is exploration. And Plomosas, as an asset that wasn't being valued in the market, should be monetized. And how that monetization occurs is open to discussion. Different models. If you look at it, we mentioned that we're doing something called small scale mining bulk sampling at something called Sun 1, which is on a parallel structure, a small asset with a small resource. And we still have a relationship with a local mining company, a Mexican mining company that comes in and mines it, and then we get a check. And so all the risk of operation is with that company. All the capital that was necessary was with that company, and we get a check out of it. So there's monetization of a small asset, and we got a huge amount. We continue to get a huge amount of very important information from that effort. And so Plomosas is much larger than Sun 1. So we're looking at different models. You can have someone come in and do that. You can have someone do the mining and then toll milling. But there are opportunities to do something more significant from a monetary basis. We'll see what form that takes, but those discussions are in place.
So, I can't work out. Is there revenue now in some way, shape, or form? Bulk sampling?
In Sun 1, if you look at our financial statements, we have something called other income. We haven't declared production. It is a bulk sampling program.
Yeah.
That has some other income associated with it.
Okay, let's look at back to San Marcial, because that seems to be the prime time. So you kept things going. What have you done to the balance sheet? Okay, you had this albatross around your neck for a bit. How did that get sorted out?
Yeah, back several years ago, we acquired a property that surrounded San Marcial and Plomosas that brought with it hundreds of square kilometers of exploration ground. It brought with it a former producer, the Trinidad operation, which was a heap leach and an open pit called Taunus. And with that also came the consideration for that purchase was taking on Mexican mining concession arrears. And so at the time, that was on the order of around $11 million. Since that time, that $11 million exploded to $28 million.
How?
Through the pesos relative to the Canadian dollar went the wrong way. Then you had penalties and interest on that. So that albatross had to be dealt with. And the way that was dealt with was by selling the subsidiary that owned that land, that also had the mining concession arrears. That subsidiary was sold to a private company, and they have the ability to work with that going forward. So effectively, we lost exploration ground. We did not lose any ounces. All the ounces are at Plomosas and San Marcial, and we also removed all of that debt.
Okay. No liability whatsoever.
Correct.
Even if they fall over,
that's
close the door. Bye-bye. You can't go back in. Okay, yep. Cool. Okay, and then you're sitting with what cash at the moment? After
it was around 1.1 million was the last number I saw.
Right. Okay, so it's less than that. now, you are going to have to display a plan, a roadmap going forward, and why you think that should be valued at whatever you think it should be valued at. So, can you kind of lay that plan out for us now?
Well, we haven't laid out any specific exploration plans. That is going to be dictated by the change, the pace of change in Mexico. So as
what does that mean?
Drill permitting comes through, as
Right.
security situation improves, then we will resume drilling at that point in time. We have the cash to drill with a limited program to start, but we have in our heads a significant drill program. We have 4 new target areas associated with San Marcial that have a similar geological setting to what we see at San Marcial. We see surface expression that we want to be testing, as well as lithogeochemistry, as well as geophysics, all supportive of these new areas that have that geological setting that we think is highly prospective, that we want to put drill holes into, all in the area of San Marcial.
I'm trying to work out, look, the market's been good to you this year. Your stock
Yep.
at the beginning of this year was, let's say, painful. You've ended it's come off a bit, where as I think gold and silver have just come off a little bit recently. So you kind of reset in the last month or so, but that's fine. You're way, way higher than you were at the beginning of the year. It's been good to you. Market cap somewhere north of 60, 65 million, right? Things look very different now. Is all of that value being attributed to San Marcial? Is that what you think people are valuing? I mean, what are the things they're valuing? Because if you're saying to me, we're going to just sit around and wait for things to kind of calm down, we've got a million-ish in the bank, and we'll come back to you at some point, let you know what we're going to do. I'm like, well, crikey, I need to understand what I'm sitting around waiting for. So
absolutely. I think in terms of in discussions with investors, most of the value is attributed to San Marcial. So we're trading at around, call it 65 cents per ounce in the ground, which puts us in the middle of the pack relative to Mexican peers. So it's not like we're overvalued or undervalued. We're right in the middle, which is a good place to be. But what people are looking forward to is exploration results at San Marcial. So we have these new targets. We're going to hit them. We're going to hit them hard as soon as the situation changes. We're not sitting around waiting. We have geological teams that are working on refining those targets, preparing the ground for further exploration. But we're also kicking tires, as I said, about the idea of a consolidation. So I think that's part of the narrative, that there will be consolidation happening in Mexico, and it is our intent to be front and center in that.
Okay, do you know, it's because there'll be a lot of companies saying the same sorts of things. In fact, there are. I've been speaking to lots of them. Everyone's got plans and ideas, but at some point we kind of like to see the doing bit, as it were, or at least get a sense of the realistic expectation of delivering those doing bits, rather than. It's kind of like it feels like the Mexican companies are like floating in a pool at the moment, just kind of, waiting to kind of see what happens. Yeah. The AMLO time has gone, but they're not quite sure how to move forward with the new regime. The market's definitely not back for explore codes. The money's, it's hard out there. Whichever conferences you go to, whoever you talk to, the money's not cascading down from these large M&A projects as quickly as I guess retail had hoped, and it'll be a long time coming. So how do you give any kind of certainties, guarantees that you're in the best place to do some of the things you're talking about doing, ahead of some of the others who are talking about doing the same things?
Right. As you know, there are no guarantees in life, so I'm not going to make any promises. But I will tell you this. Over a year ago in October of last year, we were trading at 3.5 cents. And I was saying to people that we are going to fix our balance sheet. And we did. 2 years ago, we said we were going to deliver a resource update, and we did. At this point in time, I'm very pleased to say that we've had this financial turnaround. We are going to participate in this consolidation story. We are going to resume exploration. It's going to happen. Whether it's next week or next month, 6 months from now, that's the uncertainty. That's where we have externalities like what's happening in Mexico We can't promise any changes there, but we can promise that we'll take advantage of the opportunity when it arises.
Will the money be there for you when you want it?
When we were looking for one and a bit, or even $500,000, it was getting blood from a stone. Recent marketing in Europe suggests that there's money available if we can deliver on that plan, if we can participate in consolidation, if we can resume exploration. There was a lot of expression of interest. So I'm quite confident that even in today's market, that there is an interest in funding that sort of business plan.
Okay. What does the market look like? What does the Mexican silver market look like in 12 months' time?
In 12 months' time, I think the key thing is that there'll be less uncertainty, that we'll have a clearer signal of what the Sheinbaum administration will encourage, what it will tolerate, what it won't tolerate. And with that uncertainty gone, we can expect valuations to go up. We've already seen M&A begin in Mexico with SilverQuest, with Gatos. I think that trend will continue. It won't just be acquiring, it'll also be consolidation. And you alluded to it earlier. I think that every major turnaround in the market has been heralded by the creation of new companies. In fact, it seems to be fives. If you look at the creation of Wheaton, for example, it was 5 companies that were slammed together. Cisco, 5 companies. I'm not saying we're going to be part of a 5-way, but I am saying that this bottoming of the market will be heralded by consolidation.
Yeah, sometimes 3 ways good enough, isn't it? Okay. Look, I appreciate the update. I really do. And it's good to kind of see you out there, thrusting forward and with a plan in hand. Stay in touch, please. Let us know how you get on, or if we're seeing what you're going to be able to achieve next year. So appreciate your time. Thank you.
Matthew, it's always a pleasure. Thank you for your time.